Well, welcome back, everyone. It was an incredible week in markets where we started off the week right on track to our flight path. Over the first 2 days, we identified a higher probability at the beginning of the week. We send out a flight path to members of the active trader room, magenta and the dotted blue line. So two options, and we pick the one that is more mathematically sound. And the magenta was more mathematically sound, and we did note that there was a better than fair chance on Thursday and Friday for us to move to that dotted blue flight path. Now, needless to say, last week we ended on the 24th right there, and you can see it was around $529 and change on the primary market, the SPY. We started off this shortened week of trade after the holiday weekend on that magenta flight path, but didn't actually take that rise fully into account. We did come down a little lower, and we ended up closing on the line. We then followed through, coming down pretty much precisely to that area indicated by the magenta flight path. And on Wednesday, we identified that, yes, it's very likely that we're going to move to that dotted blue line. We did so on Thursday. And today, what a reversal. A lot of it was mechanical unwinding of bearish positions and expectations of positive flow into the next month. Of course, it's the last month of the quarter. Now, we had a price move that took the SPY, as you can see on the top left-hand side of the screen, to a low of $518 and about 38 pennies. We ended up reversing off that low, an incredible turn of events all the way up. And quite frankly, we made a move that's almost $10 higher. The high of the day was, in fact, $527 and about 50 pennies. So an incredible reversal. Now, a reversal of this nature, where we've come into a market potential topping pattern, has to be taken seriously, even though a good chunk of that reversal was mechanical and not necessarily truly demand driven. So demand for equities, that is. So where are we going in this market? Well, I'm going to pop up my templates on the S&P E-minis and, of course, the NASDAQ. I got to do a little bit of live trading in front of members this morning in the active trader room, and you can see a gross of about 425 there. And that's one contract trading only. When you look at the ES and the NQ to carry on the journey from the last chart we were looking at, well, we've got a very busy week in front of us. We've got manufacturing data coming out of the US, the ISM PMI data coming out right at the beginning of the week on Monday. More manufacturing data coming out on Tuesday. A Bank of Canada rate statement on Wednesday. The Eurozone Central Bank giving us their rate statement as well. So a lot of monetary policy events. And it is the first week of the next month. So we get the official jobs data from the US market on Friday next week. And of course, a precursor to it with the private payrolls on Wednesday. So it's a very jam-packed full week for data and events. And of course, earnings season is now largely in the rear view mirror. So when we look at our technicals, we noted that the S&P 500 using the Champion Trend Pack Toolkit went through all three stages of its sequence of signals and then pulled back. And you heard me say in videos like these, the risk ultimately is for us to pull back and come down to the second last breakout forecaster. From there, if we get a resumption signal would mean we get the Champion Cross zone expanding, and we get the Champion Cross buy dot back on screen. It's at the bottom of the main chart. So that has happened, and it happened after we had a move that took us down to reverse and test all of the pretty much all of the remaining breakout forecasters, and they still acted as springboards. We held the Champion Trend buy zone, and today, with that reversal, the candles has gone blue. That is an important thing to note, but we have closed or about to close above the Champion Cross buy zone and the speed lines for the S&P. Now, we still have about half an hour for the market to tick away until the actual absolute close for the futures. Nonetheless, a magical, amazing reversal. Is it likely going to mean up for this market? Well, when we take a look at the indices that actually drove the result in today's market, it was the indices that had more short interest against them overall, and they did do a much better job and cleared a lot of resistive structures. So one of those indices, for example, is the IWM, the Russell 2000. So if I take you back to a chart of the Russell 2000, you can see that the candle cleared all of the resistance from yesterday and the day before, and is starting to try to reverse its overall down move. It's done a better than fair job of doing so. Now, you were looking at the NASDAQ a moment ago. We're going to go back and look at the NASDAQ on that right-hand side of the screen here. It has not been able to take out all of the resistive features, and it is, yes, in a delayed situation versus what we've seen the S&P in. It, in fact, has not come up to close above the speed lines, which are still pointing down on it. It has still got the champion cross a buy zone in play, but it's not in a buy zone signal. We don't have the block underneath. Now, is it simply in delay, or is versus the S&P signals, which is what we've seen throughout the entire month, largely? Now, my answer to that question is it has taken a lot of effort to take us up off the ground in today's market, and would require catalysts to take the NASDAQ even further. Because of the nature of next week being monetary policy events overall, rates are in question, and if the market is truly going to get into a breakout back above the highs that we made a couple weeks ago there, well, we need to see more data that supports rates come down. Now, this morning, the core PCE price index did come in cooler than the market's expectations. However, I didn't see a big change in the pre-market. So when I was talking to members in that active trader room and on WealthCharts this morning, the insight was very straightforward. Not much has changed. I'm still expecting us to come down. And we did. The reversal mechanically started. Shorts got squeezed. Bearish positions came off the table for end of month. And as we start the new month, my assessment would be the momentum is sufficient to try and push us up a little higher. But until we actually have cleared resistance in and around the 18,800-ish area on the NQ and resistance in the 5,330-ish area on the ES or the S&P 500, I'd rather reserve caution and more day trading rather than looking at this as a swingable moment. It was strong, but the mechanical rationale supporting it negates a little bit of the price rise for me. Its implication for swing into next week or swing into a uptrend. So the de facto outcome is a market that has closed quite nicely, but not enough yet to convince me that we're going to be taking out the all-time highs next week. We navigate through the landmines of all of the data coming out next week. Sure, the opportunity to do so, and today to be the springboard for it, could be correct in hindsight, but I want to trade what I see. And what I see is a market that has not convinced me that all is well. Nonetheless, one that we've got very specific areas to identify the next likely move. Break that 5,330-ish area on the ES. We're talking about a move that can then follow through likely to the upside and perhaps even sustain and be somewhat more durable. My view is this market is still too stretched to start a new uptrend, but for several days to up to a handful of days, can it stay up in the air, perforate the highs, all-time highs, make higher highs? Well, that would be on the table. It's not yet enough for me to say this market will trend up and go up and away from here throughout June. Have a wonderful, wonderful weekend. Thank you for watching. Looking forward to seeing everyone back in the active trader room and for the Hour of Power on WealthCharts first thing on Monday morning. And I hope that you enjoyed this video, and I look forward to the next one with you. Have a great rest of your day. Bye for now.